Hello and welcome to Crypto Invest TV. I'm your host, X8, and let's get into it. So, today we are going to talk about the reality of cryptocurrency and fiat. And the question is, are you in control of your money? And then the reality of fiat currency. Currencies are nothing new to civilization. In fact, it predates as far back as the birth of fire itself. They are called commodity currencies. And that's what makes the structure of currency today, essentially. That's what currency is based on. And they follow five traits. Scarcity, it needs to be a limiting resource. Recognizability, it needs to be something everybody else understands or recognizes. Dividability, it needs to be something that can be split into multiples. Fungibility, it needs to be able to be substituted for another type of currency. And then portability, it needs to be something that can be easily carried. A lot of things can fall under this: grains, salt, metal, gems, even rocks. How how can these hold value? They hold value the same way that a child, you know, values a toy or candy. They're willing to trade that toy or candy for something else. The value of something is based on the trust of individual that on the trust that individuals have among each other and ideas that they agree upon. The issue with commodity currencies is that they're a low durability, right? So what this means is that crop failures or uh, or salt deposits could lead to massive influxes in their economies. And so we fall into the birth of metal currencies. And metal currencies fit those five traits, but they're much more durable. Even in some cases, they're more durable than some of the civilizations themselves. Money and currencies are not something new that governments made, but rather adopted. Currencies come from the necessity of goods the necessity of trading goods with others. It's formed naturally over time, but next comes the issue of metal coins. Uh, they had become a centralized currency. Its value is based upon the trust of the people to their leader. Minting allowed the growth of an economy, but on the other end of that, it could begin to destroy it. Over minting or disbasement could be one of those factors. And disbasement is when the metal coin of, say, silver or gold has a small amount of iron, tin, or other types of metal added into them. Um, Making the coin's size and weight the same, but the silver content or gold content or whatever that people consider to be of its actual value decreases. Debasement over time can lead to the devaluation on that coin. Other countries began to have issues trading as the trust of their coin fell. Merchants noticed this and acted, and that's how we had the birth of paper money. This is not based on the value of an object, but on the promise of a payment, creating the debt-based currency. A trader ordered a good from a top merchant, but rather than paying with coins, they would use an IOU, a piece of paper stating that that the requested amount would be paid on a different date. In turn, that merchant would then take that piece of paper essentially and then use it as a form of payment with another trader for a good that had been delivered to that merchant. They didn't trade through the use of coin currencies that they used, but through a debt trust currency system that they had all agreed upon. Through this, bankers realized that vast amounts of metal currency were being left completely untouched, and had the idea that they could profit off of this in some shape, way, or form. And this is what led to the birth of bank debt lending. They would lend these coins out as a loan with interest, like banks normally do. The difference being that they were lending out money that they didn't actually own. It was money that was in their bank, but it wasn't actually owned by the bank themselves. It was owned by the people that they were holding the custody of the coins for. Um, by lending more than what the bank owned, they could make higher returns on the interest, in turn making more profits. Banks would issue notes for this currency, and over time, people preferred the notes over the actual coins themselves. Banks could write more notes, and in turn, people could receive more loans. The bank started to mint money essentially where none existed, but it was agreed upon that the system that they were using was trusted, and then that's how we lead into the birth of bonds. Bonds were created because governments needed money for services, projects, and wars that they simply could not fund through taxpayers. And so bankers and merchants were essentially wealthier than the governments that they were under in that notion. And so governments would sell these bonds to bankers and merchants in return for funds, creating deficit spending. Um, this would create volatility within the economies, which is when we ended up having the birth of the central banking systems. The Federal Reserve System was made to increase or decrease a nation's currency via a reserve note. The dollar was pegged to gold, and this would help control its ups and downs as well. This is in an effort to control those prices. In 1929, we had the Depression, which crushed the economy, and the nation needed gold in order to mint more U.S. dollars. The government would buy gold in any shape, way, or form that it could, starting with its citizens, giving them a fixed rate price, per ounce or per pound of gold, we'll say, and then offering a different fixed rate price towards nations. By the end of this, the U.S. owned more than 50% of the world's gold. The world began to be backed by the dollar, and over time, the nation began to mint their dollars, even though they didn't have gold to support it. This is what began the gold to paper currency standard to crumble. Nations began to realize this and wanted to start getting the gold that they had sold back from the U.S. As pressures mounted, the U.S. separated from the gold to dollar standard, which was also supposed to be only temporary. By doing this, they had made the dollar become backed by only the word and trust in the government. Today's currencies are minted based on bonds being released. This increases the deficit spending. How this works is a bank buys those bonds from the Treasury, and then those bonds are taken to the Federal Reserve at a profit. The issue is that the Reserve isn't a bank, and it doesn't actually have any money. What the reserve does is it gives a principal and profit and essentially tells them to have a good day. Newly added funds appear in the bank's accounts where no money was actually created. Um, the reserve is a private entity that has shareholders and members that we'll never publicly know about, and this is what keeps that system going. Um, Even though it would end up having long-term consequences like inflation. This inflation of a currency can lead to massive changes in the price of the dollar over time. 2% inflation year over year at the start of this has lent to the dollar becoming worth only 4 cents of its original value. Uh, this is just what inflation does. The dollar, as you understand it today, will be worth only 98 cents next year, and then the year after that, only 96 cents. So within 2 years, you'll lose 4 cents in value on the same dollar that you hold right now. This is how we also end up with other systems like the birth of the empty money system. Remember when I said that bankers and merchants would give out notes as a exchange of value when they didn't, if they did or did not want to exchange the coin or did not own any of that coin. Banks did and do this same thing today. The money in your account, once it's put in there, is under the ownership of the banks. The bank uses your funds in the way that that makes an empty money system. If you put $100 into your bank account, um, it will reflect that you have $100 in your bank. And then someone else comes up and they need $100, or they need a $97 loan, we'll say. Well, the bank only actually owns $3, but what they'll do is they'll say, all right, well, you own $100. So we're going to say that since we're in custody of your money, we own $103, and so we can afford to give that $97 loan. So they give that person that $97 loan. The thing about it is that there was no actual money made there. There was no extra. There was no monies moved. No money was moved from one account to another. They generated a virtual currency, essentially like a note, like an IOU, inside of their own system. And so then this same person goes and they take that new money that's in the form of debt, and then they spend it at the store, and the store takes their money and then they go put it in the bank, and the same thing happens essentially again. Now you have three accounts that have over $90 each, one being you, the second being the store that the loan money was given to, and then the third person that pulls out the next loan, essentially based off of you and the fake money that was put in by that said store. So if each bank holds $3 and then they use your copy of $100 to give to somebody else, so now it's you have $100 with you, the store has $97, the last loanee, and then the last loanee has $97, and both banks that did those transactions each hold $3. The real amount of money that there actually is only $106. But then $194 is essentially generated off of money that you put in and that the store puts in, and both of you are essentially seeing that as real money that you put into the bank. So now we have $194 that's generated off of initially 103. And so now you can see where that issue is. As more banks do this and have done this, this is what creates the system that ends up crumbling when loans end up needing to be called upon, like what happened in 2008. A combination of bad loans and the empty money system shattered the world economy, which brings the birth of cryptocurrency. This collapse inspired someone or someones like the Satoshi Nakamoto. The creation of this new currency system was born on that foundation of trust that we find to be indisputable. It's an open source software that allows us to understand and build upon it. To expand on its foundation it's created. Blockchain technology, Bitcoin, is based on mathematic truths. Math is the base of truths, and regardless of the advent of Bitcoin or blockchain technology, those truths are unchangeable. We understand math as to be certain truths that are unchangeable. If I have two sticks and I say this stick plus this stick makes two sticks, and I have two sticks, it's completely true. If you have one individual stick of two kind and then you say that you have two sticks, then you have two. It's just those are the facts, right? And so that's what blockchain technology and Bitcoin is built upon. This is fundamentally different from the dollar. Unlike this MD money system created by the bankers, Bitcoin was created using math as an open source protocol. The finality of it makes it even more stable than you could say for fiat currency as a whole. There's only so much of it. This system understands what can be faked. The blockchain nodes, miners, they check for these fake transactions that do end up getting put out there, and then it verifies the true transactions based on mathematical equations inside of its own ledger, that being the blockchain itself. So it checks itself through verifications of others, and it uses the internet to do this, to communicate across the world to those other nodes and miners. All the miners have the same blockchain information, and it's always continually updated. This system is one that verifies through each other through proof of work. It's what gives crypto Bitcoin its strength. Um, as it's no one person can determine its value, and it's not controlled by one entity to base its value. So if we take what I said about the start, about the 5 traits of what a currency needs, blockchain technology and cryptocurrencies fit that bill. We have scarcity. Even with uncapped cryptos, there's only so much at one point, because it's mined and minted at a steady rate that's built into its algorithm, and it's not necessarily changed unless it has an algorithm that also changes it based on variations. So that way, it's always controlling itself. It's a true system of trying to hedge itself against deflation or inflation, right? You don't want it to become so valuable that it, or so much of it that it's worth nothing, but you also don't want it to end up being so little of it that it's worth too much. And so that's how you end up having the proper amount of scarcity for even uncapped cryptos. We have recognizability, the second trait for a currency, which is crypto is known far and wide across the world. People know about cryptocurrency. We know about Bitcoin, Ethereum, and all these other things. So it fits the second bill of what of the 5 traits of what a currency is. We have dividability, which is Bitcoin at one point, as you know, you could buy multiple Bitcoin with one of the US dollars. Now it's at a point to where you have to spend thousands of dollars to get one Bitcoin, but you can still buy Bitcoin with less than what the cost of one Bitcoin is. So it can be fractional. So it has the third trait of what it is to be a currency. You have fungibility, which means can it be substituted with another currency? Cryptocurrencies inherently are already like that. Cryptocurrencies can be exchanged with other ones relatively easy. You can exchange Bitcoin for Ethereum or Ethereum for Binance with relative ease. So it fits the fourth description or trait of what a currency is. And then you move on to the fifth trait, which is portability. How easy is it for it to be carried around? And the fact of the matter is that it's obviously very easy to carry cryptocurrency around. It's a digital currency. It can be taken anywhere across the world. You can always have all of it on you without there being any extended wait times. So this ends the question of if crypto is real in comparison to other currencies. Cryptocurrency is more real than 99% of all fiat currencies based on the information that I've given you about how bonds work, how there's essentially what we call an empty money system. And so with cryptocurrencies, you always own all of it. It is always all yours, and no one can mess with it. No one can manipulate your money because it's in something that is only accessible by you, based on your choices, right? Because we have multiple levels of ownership when it comes to cryptocurrencies. And so it can never be faked by anyone else. Like, you can't fake a Bitcoin. I can't generate more Bitcoin. That's a fact. I can't generate more Bitcoin. I can't. I can buy more Bitcoin. More Bitcoin can be minted from its total supply, but I can't make there be one more Bitcoin than what was made in the original existence of it. And that's what makes it more real than fiat currencies. And then it's not under the control of any system that inherently weakens itself over time or devalues itself over time. And so the big debate about whether or not fiat currencies or cryptocurrencies, which one is better than the other, or which one's more of a tangible or a real asset, at the end of the day, which will actually and honestly by factual truths hold its value in comparison to the other, which is more portable in comparison from one to the other, which is more fungible in comparison from one to the other, which one can be divided more in comparison from one to the other. And then on top of that, which is the scarcity. When it comes to cryptocurrency, we can make scarcity with cryptocurrencies. Fiat currency doesn't even care about scarcity. That's more than apparent with the level of minting and printing of fiat currencies that go on right now. And so you can't say that that any other currency would be able to compare to cryptocurrency if it's based on an empty money system and printing whenever the time suits. And so that's essentially where I wanted to start off with today before we went off into the market check. As you know, we have the Underdoge with us, and we're going to go ahead and get into doing the market check right now. So we're going to go ahead and we'll take a look at Bitcoin right now. It looks like we're sitting at 34,500, 600. So we can see that we had a nice little spike. Later on in the day, we dropped down to that 32,000, and then we ended up having a fairly quick recovery going later on into the evening yesterday. And then we went up to a high of 35,300, and I think that's actually, no, it's not a higher high than it was the other day, but that's okay because we are testing out the range of trying to break above 35,000 again. And you can see that we've been staying relatively flat for the day. We've had our dips for the day and then come back up, but I mean this is a really steady pattern that we've been seeing. If we go ahead and pull out to the 1 hour chart, we can see from back when we were above 40,000 that we're actually pretty well on track to having a pretty healthy recovery. If you look at these stair steps, every time this stair step essentially right now is you know is I guess what you'd say is suppression, right? And so that suppression is only happening because we were going into Sunday, and so there was less, I guess you would say, like buying power. There was just less volume, I would say. But still incredible volume, and especially going into the later hours when the other markets were opening up, and then going into today. And essentially, what you're seeing today is the primarity of the suppression coming from the institutions that try and really keep it below that certain target number to keep acquiring more Bitcoin or other cryptocurrencies like Ethereum. If we go out here and we look at the 15-minute chart on Ethereum, we can see that we actually pumped up above 2,000, and we hadn't seen that for quite a few days. So I would say that that's pretty fantastic when you consider where we were at and how worried everyone was the other day when it came to the futures contracts. And so we can see that we're actually doing really well. Also looking at a stair step, we can go ahead and pull it out to the 1 hour chart and see how we're doing on that. Much more strength in the upwards trajectory for Ethereum, I would say, in comparison to Bitcoin right now. But moving into BNB, it looks like it's trying to break its 300 resistance. We know that it's been trying to get above 300 for a few days now. It broke down almost down into the 250s range with a fairly decent recovery going on into the next day to about 280 in the 280 range. before Sunday came around, and then remember we had that low volume coming on Sunday until the later end of the day, and that's when we ended up having that great bounce back. So that's essentially what the market's looking like right now. We can go ahead and move into our first topic, which is the mining drop that's going on with Bitcoin. So I'll go ahead and get that pulled up, and we'll go from there. So the Bitcoin mining hash rate drops to the 1 year low. So difficulty is to be set for a 25% decrease. That's what we're hearing right now. Um, so we'll just briefly go over this article. It says that China's crackdown on cryptocurrency has been a blow for Bitcoin mining companies and pools based in the country, with some hit harder than others. However, for active miners in parts of the world, it might be good news. Bitcoin's mean hash rate, a measure of computable power working to secure the Bitcoin or the blockchain network, fell to 94 EH on Sunday, the lowest that it's been since May of 2020, according from Glassnode. Meanwhile, Bitcoin mining difficulty could see a 25% drop uh, at the next reset, likely on July 3rd. And so the reason why I was going to go ahead and bring this up is because, if anyone's looking into getting into Bitcoin mining, now might be a good time to start getting in, just for the simple fact that if we do see that 25% drop in if we do see that 25% drop in the mining difficulty, then I mean there's some profits to be made. What do you think about that, Underdoge?
Yeah, I definitely agree. I would have to say that there's definitely going to be a lot of profits to be made here very soon,
Yeah, I mean we're
especially with
seeing.
that run up we just had yesterday. I mean, I see us going back into another uh, bull market.
Yeah, I think we're definitely going to see some really great things going into you know going into July. I think I think we've kind of gotten past that rough part of the cycle, and I think we're gonna go. We're gonna start heading back into the numbers that we were feeling a lot more comfortable with, and potentially we could be seeing some new all-time highs. I understand that there was a mass influx of tether onto exchanges. So last time we saw that was during, say, the Bitcoin announcement with Tesla, right? When Tesla announced that they were buying what was it, like $1 billion worth of Bitcoin. So that's the last time that we saw that kind of influx of tether, and that's what we're seeing again right now. There's just a massive amount of volume going into it, and so that can only mean that we're getting prepared to start launching back into the previous trajectories that we were seeing, in April and in the beginning of May.
Yeah, I mean, we're going to be seeing a lot of money coming in here real soon. I tell you that right now. Uh, we saw a lot of money being dumped into the market yesterday. I don't know if you paid attention, but I know you did, obviously, but when I sent you that video or that photo that my friend had posted on Twitter, there was a mass spike across all cryptocurrencies yesterday, even tokens. It was absolutely insane. And I feel that with inflation rising on the dollar right now, I feel everybody's turning to cryptocurrency and stocks. They're getting away from the dollar. They're starting to get into gold, forex trading, forex markets. Um, they're getting into hedge funds against inflation at the moment, and that's exactly what cryptocurrency is.
So here's the actual. So here, there's actually a problem with trying to hedge your bets on gold.
Well, it's not just gold. There's other commodity fields that, or not commodity fields, but
No, it's
other
commodity
fields
fields.
in the commodity fields then in the investment industry that are you don't have to invest in gold to hedge yourself against inflation. You can get into things like realtor investments. Those are really good opportunities
Really
to
and honestly, really and honestly, not financial advice, but at this point, when you consider everything that I was saying earlier, at this point, I feel like the best thing to hedge against inflation uh, is cryptocurrency because there's no manipulating it. Because here's the thing about
yeah,
all
but
other type.
what I'm trying to get at though is if these people don't want to put their money into cryptocurrency and they want to protect themselves against inflation, they need to invest themselves into things such as commodities, which run as gold, silver, minerals, things of that nature, real estate, other
Physical
things like that.
items.
So I think that if they don't want to get into cryptocurrency, which obviously is probably one of the best ways to save your money during inflation and gain interest, then they can take their money and put it into stocks that are directly invested with like real estate and stuff like that. Instead of putting them into ETFs, they can take them and go actually invest into real estate investment firms like Ground Floor, or or go find a broker that allows them to access the forex markets, giving them access to gold or other minerals. You don't have to invest in gold. Like right now, it would be uranium, or not uranium, but what is it? Nickel and
Copper.
uh, no, yeah,
Cobalt, that's the one.
for sure. But it was that lithium is another one, and then there was another one that was really sought after for like the computer chips for the electronic vehicles. I can't remember the name of it off the top of my head, but like minerals like that, like you don't have to invest in gold. You invest in something that's a commodity, like Bitcoin. You know, so even trading cards or something of that nature. There's other ways to save your money to gold and or try to beat cash. Now we're advancing, so yes, cryptocurrency would be one of the better options to take.
Yeah, and that's why I was saying. I mean, it's just when you look at the reality of how the fiat system works, uh, even when it comes to some of these commodities, specifically gold, is what I was saying about earlier. People are buying gold, but one of the problems is that they're not physically holding a lot of people are not physically holding the gold, and that's a big issue when it actually comes to hedging against the inflation. um, because as it sits right now, one of the ways that they've been, keeping the value of the dollar where it's at is they've been pushing the price of gold down. Like when it comes to gold prices, the selling pressure on it is immense, and that's one of the core things that that banks and governments, or not banks and governments, but banks and other organizations work towards doing, is trying to suppress it at a continual price. Because if we were to let gold actually end up being at its evaluation that it realistically is at, it would end up destroying the dollar. because we've ended up creating so much more than what actually exists. Essentially, we're at this tipping point, or not even necessarily a tipping point, but we're at this certain point to where you know if we have to, as a people, we have to start looking at what it is that we need to do to try and retain our value. And the reason why I say that is because at this point there's things have become so skewed when it comes to currency that you can't we can't look at what's real anymore, because there's so much money that's been created within such a short period of time that I don't understand how it can continue to hold its value. Like, there's certain coins throughout history that held its value for long periods of time, hundreds of years, 400, 600 years. And you look at the fundamental of what the U.S. dollar is based upon since the early 1900s, when it became that U.S. dollar, a different version of itself. And I mean, it's already essentially on the face of collapse. What happened in 2008? It's not gone. Nothing happened with 2008. Nothing changed. That what happened in 2008? The failure of 2008 that crumbled the world's economy. Nothing. We never actually did anything to fix it. All we did was just kick it down the road. We perpetuated the problem with the same problem that we're already doing, and we're just putting on that higher facade. I mean, in reality, when it comes to cryptocurrency, or not cryptocurrency, when it comes to fiat currencies, um, you know, when it comes to fiat currencies, they're realistically not a tangible asset to me anymore, and they really shouldn't be to anyone else. There's nothing backing it anymore, except for just the word of leadership, and even the word of leadership can't protect us from that anymore, because they have nothing to back their word of leadership. You look at how much was printed over the past couple of years, and I mean, we've essentially doubled how much we've had in the past. We've doubled the amount of money in the past couple of years than what we've had the entire time that we had that system going. And we're only perpetuating that same issue that we had in 2008. The things that we're doing with quantitative easing and all that, all it's doing is continually kicking that can down the road. And there's going to come a time when the next person's going to come up to kick that can down the road. And here's the thing, is that every time that somebody kicks that can, it doesn't stay as that can. It gets bigger and bigger and bigger until that can essentially is the size of a mountain. And then the last person goes up to kick this mountain of a can, and they're not going to be able to kick it. And that's when the official collapse will happen. Because what happened in 2008, that was basically getting a peek of what's going to happen, except there's going to be no resolution. What happened in 2008 with the crash, there's not going to be a recovery from it, because there's not going to be anything to recover from it if there's nothing for us to base value on anymore. And the reason why I say that we can't base value on gold anymore is because wherever you go to buy gold and you're not actually physically holding that gold yourself, there's no guarantee that the gold that you bought actually exists, because of the way that the empty money system works. All these organizations, these companies, all these entities up in these high levels, they all use that exact same system, even with gold. So unless you physically own it at your home, at your residence, or wherever you store it, and not a bank, unless you can physically access it yourself without any middleman intervention, you don't actually know for sure that you own that gold. So when the system officially crashes and when things finally collapse to its finality, that's when we're going to end up with that happening. And people are going to rush to go and get their gold. That's what they're going to go and do. They're going to be like, oh no, fiat is crashing. The US dollar is done for. It's more than apparent. Mind you, that we're already sitting at, you know, the US dollar being 4 cents, 4 pennies of what it was worth in 1913. So, I mean, realistically, it's already absolutely worthless. And we just continue to believe this Ponzi scheme of a facade that it has value. And so once it finally crashes and people go to run to buy that, to get their gold, when they go to cash in to get their gold, and then, you know, it's going to end up being one of those first come first serve things, and that's even if they even try to release it, because who's really going to be the first come first serve? Do you think it's going to be the clients, or do you think it's going to be the company that actually is in custody of that gold? It's going to be the company that's in custody of that gold. The clients aren't going to matter, and since the whole financial system is collapsing, there's essentially going to be nothing that they can do to bounce back from it. So that's what I'm saying when I'm saying, like, certain commodities, unless you actually own the commodity physically yourself, it's not going to hedge you against inflation. Because if you're owning the representation of that commodity, then it's worthless. It's just like how when they say if you don't actually own your Bitcoin, or if you don't own your Ethereum, if it's held by a custody company, then you don't truly own it. That's why we have the three layers of custody, right? We have the first layer of custody, which is you truly owning it. The second layer of custody, which is like exchange custody, you own it and the exchange owns it. You all share custody simultaneously. Um, and then you have the third level, which is like a grayscale, where you own a trust. You own a representation of that, and you can buy and sell it at any point based on the the repability of that company. And so when all of those crashes happen, all the companies that are involved with commodity, physical commodity products like gold and silver, and people try to go and cash in to get those commodity good currencies, they're not going to be able to, because all those companies are going to be, they're already going to hold all of it, because, in reality, they're going to hold the majority portion, if not all of it, because they're doing that empty money system with the gold. For all 90% of a company's clients could be based on virtual gold, and, it's all on this IOU system. And so that's why I'm saying when the crash happens, for me personally, I feel like cryptocurrency is going to be the only thing. And at that point, that's when you're going to see the huge exchange of wealth happen. That's when you're going to see, um, you know, governments having to come to the people and essentially having to restructure the system. And I'm very unsure of what's going to happen when that happens. But what I'm hoping is that we can get to a point um, to where when it comes to uh, our financial system, that we'll be heavily integrated enough as a society into cryptocurrency that when that does happen, the conversion will be fairly, I guess you would say, fairly fast, and it won't be substantially crushing to everyone, to the world economy, because essentially, if the U.S. dollar was to crash and there was nothing to back up right now, there was nothing else to go into, because you got to remember that a gold essentially for individuals isn't going to be something that you're going to be able to go into and collect if you don't physically own it. So what's going to end up happening is we'll need something else to back up the to back up that crash, and that's where cryptocurrency has to do that. Because if cryptocurrency doesn't become something that is adopted on a more massive scale, like, I'm not saying that everyone has to be involved with cryptocurrency right off the bat, but it definitely needs to become more of a foundational thing for society before that crash happens. Because if the crash happens tomorrow, even people who are invested, there's gonna be serious problems even for people who are invested in cryptocurrency. And I'm not saying in the matter of wealth, but I'm saying in the matter of the infrastructure. Because if the US dollar was to crash, and I mean the whole system truly crashes to its full finality, like it will eventually, then that means that the lights are going to go off. And once the lights go off in one place, then they're going to start going off in the other places. And we have to hope that at that point we're integrated into cryptocurrencies enough to where we don't end up losing cryptocurrency itself because of the stupidity of the fiat currency systems. Because remember the only reality where we lose cryptocurrency, we lose blockchain, is if um, the entire world goes dark. And even then, I mean, we still have, cold backups and stuff like that, but then it's a matter of timing. Then it's a matter of how much time before you get everything back up and be able to try and get that system back up. Because then it could be potentially saved by, cold storage backups and stuff like that. Because I already know that there's systems in place by huge mining corporations for events like that. But, you know, what I'm saying is that we have to make sure that that as a society we are securing ourselves before that comes. And I think I think even governments are now realizing that, and that's why we're seeing the adoption of Bitcoin from various companies. That's why we're hearing about the government working on its own U.S. Digital currency. That's a true digital currency, and the reason being is because we're going to have to transition over to that before this Ponzi scheme of a system collapses upon everyone. And that's what the transfer of wealth will end up essentially coming down to.
Sorry about that. I was having some microphone issues, but yeah, I definitely agree. Um, yeah, I mean, cryptocurrency is obviously going to be the answer to the way of being able to actually hedge yourself against inflation. But
Well, that or having
not
the
everybody sees
physical
it that way right
commodities.
now. Not everybody sees it that way right now. So
Well,
once that adoption does take place, and we'll see the growth of it again,
well, that's
in
why I was that's
mass numbers.
that's why I was saying like about how you can still hedge if you were to actually physically own the commodities. But you're completely right. We'll go ahead and we'll move on to the next subject, which is about gas fees. We'll go ahead and we'll go ahead and we'll bring this up real fast. Ethereum gas fees at a 6-month low as market cools and layer 2 solutions ease the congestion. Ethereum gas fees have abated by decreasing network congestion. Also, there's flashbots. Don't know what that one is about exactly, but Ethereum transaction fees have dropped to the lowest since December because the blockchain activity has cooled, while Ethereum's layer 2 solution protocols such as Polygon's Matic has heated, according to blockchain data analysts or blockchain data and analytics. Apologies. As of June 27th, the average transaction fee on the Ethereum blockchain was $4.42, according to Coinmetrics. That's down from fee levels above $60 in as recently as mid-May. So we're definitely seeing, some substantial drops. Gas refers to computational efforts required to execute specific operations on the Ethereum network. A fee paid in Ethereum is required to successfully conduct a transaction on Ethereum. Ethereum is the second biggest blockchain on the blockchain network after Bitcoin. So congestion on the Ethereum blockchain has dropped with cryptocurrency prices. Transactions on the network fell to around 1.1 million June 27th, down from May's high at around 1.7 million, according to Coinmetrics. Data from CoinGecko shows ETH's trading volume on exchanges has also gone down significantly, and we all remember that's because of the huge crash that we had here back in May going into June. The exchange's data is in line with the activity on decentralized exchanges. Data from Dune shows weekly DEX volume has dropped below 20 billion from the weekly beginning for the week beginning June 21st from the 40 billion at the beginning of May 17th. So essentially, I'll go ahead and I'll pull up a coin market cap, and we can go ahead and go over what it is for the Ethereum gas, which is Gwei. So currently, right now, we're seeing gas at 11 Gwei, which is what the price is based upon in ETH terms. We were seeing it as high as like, what was it, like 160 or something like that, not too long ago, and then I think we've seen even higher. I think we've seen even higher prices than that. And so, we're seeing this substantial drop in the prices, not only as, we've had that substantial pullback on, all these exchanges from Ethereum and other cryptocurrencies, but then on top of that, because of the layer 2 solutions that they are implementing to ease the congestion on the Ethereum network. And the less congestion there is on the Ethereum network, then the reduction of those prices. And so realistically, we can see this as a really great thing for both transactions and mining and building on the Ethereum network, because it makes it more attractive for devs to build smart contracts on the Ethereum network. How are your thoughts and feelings on that, Underdosh?
Um, because the gas is low, so that's enticing people to build on the Ethereum network. I don't think that that's why people are enticed to build on the Ethereum network. I think people are really enticed to build on the Ethereum network because people have been building on the Ethereum network since the Ethereum virtual machine was created. It was one of, obviously one of the very first cryptocurrencies, to come out amongst the other, 30, 40 cryptos that did in 2013. So when the Ethereum virtual machine was released, it was pretty much essentially the next step into blockchain and cryptocurrency technology. Creating smart contracts and launching them on the blockchain itself is actually pretty pretty amazing. It's intricate. There's a lot of things you can do. You don't just have to program a token. You can do quite a bit of stuff. So like storing data for one, because it's an IPFS system, interplanetary file system, and that's what IPFS stands for. And so that's cool that you can launch a smart contract with, essentially some metadata about something that you want to track forever and launch it on the Ethereum virtual machine. Now, granted, any place that or any cryptocurrency blockchain where you can produce a smart contract on, you can essentially do the same exact thing. But the fact of the matter that Solidity has pretty much like DIY programming apps such as Remix that are built to help people program smart contracts right on the web frame itself. So like if you go to the website and you're sitting there programming Solidity language into Remix, it'll give you the errors, tell you what's wrong. And if you understand how to implement the code, it will give you the string right there that you need to put in and where you need to enter it instead of what you're trying to use. Like the other day, I was trying to mess around with a smart contract, and instead of using now inside of the smart contract language for Solidity, you would use block.time timestamp, and that's how you calculate your time now, as opposed to putting the word now. And so, things like that. Um, the language itself is actually pretty simple to learn. I think that people are just really appealed to it, regardless of the gas fees, because of how simple it is to program something in Solidity and launch it on the Ethereum blockchain itself. Not only that, but right from the Ethereum virtual machine or Solidity, my bad, and Remix with the Solidity language, you can launch it right onto the Binance Smart Chain as well. So I see a lot of that coming into the future on everybody's blockchain. ADA has it now or is working on it. Who else had that capability? I think Raven has the capability of being able to write smart contracts. Polygon has the capability of being able to write smart contracts. Quite a few blockchains have integrated to that being one of the core features of their platforms. And it's just because there's so many more capabilities when you can launch a smart contract within the blockchain. It just gives so many more opportunities inside of that ecosystem. So, pretty much basically, regardless of the gas fees, people are going to be attracted to programming and launching smart contracts on Ethereum forever.
Yeah, I completely agree. I think you make some really valid points. I guess we'll go ahead and we'll move into one of our last top topics, which is where was it? I thought I had one pulled up. Oh no, it's gone. Oh, well, I apologize, but essentially I was going to talk about the rise of cryptocurrencies, and there was a specific article that I had pulled up about it, but for some reason now it's gone missing.
Yeah,
Um,
it disappeared.
but
It,
essentially, I just wanted to briefly talk about the rise of cryptocurrencies and how we're seeing that adoption slowly but surely coming as time moves forward. We're seeing people slowly adopt into cryptocurrencies. We're seeing institutions adopting into cryptocurrencies, and so we're seeing that adoption is just coming very slowly, and so I think that's why it's hard for some people to look and see that we are slowly but surely getting stronger as a community, and as crypto gains awareness. And so it's just something that we primarily have to wait on. And I think when it comes to fiat versus crypto, I think that crypto will be rising here over time. But I guess we'll go ahead and we'll just hop on to some of the more
yeah,
fun stuff.
before you do that, real quick, sorry, I was taking a dab, so I had to turn my microphone off so you didn't hear my blowtorch. But let me get that out. And yeah, man, those buys that we saw yesterday, those huge, gigantic spikes, I guarantee you those were huge institutional buys. I mean, there's no way that at a specific time, everybody in the world just happened to invest in almost every single cryptocurrency to exist. So I think that we're seeing more and more institutions and businesses adopt right to it. And instead of having to go to these institutions, most of these businesses and other places are going and getting it right themselves.
Yeah, they're creating they're using the channels that are already disposable to them to privately acquire these coins, and then companies that people that are companies being required to show the Bitcoin, they also have like their public accounts as well showing for those type of buys. But we're definitely seeing
See,
a
I think
massive influx, going into cryptocurrencies.
we were talking about this, and not like super in depth or anything, but like a couple weeks ago or something, we had touched on. Might have been like a week or two ago. I don't know. It was one of the episodes that just happened, but I brought up the term dark pools, and just touch down on those real quick. What those are is it's a circle of uh like wealthy individuals, people who are have a nice chunk of tradable cryptocurrencies, correct? And so what they do is they go and create like a pool somewhere, like a blog site or something of that nature. And then they'll start swapping cryptocurrencies, and they're trading amongst themselves, as opposed to being on like a DEX or something, or like a nationwide exchange. And they'll go in there and make money off each other, off these dark pools. And essentially, they're just really, taking a ton of money away from the actual market, from like us investing. And the majority of them are institutional investors. So I see those people coming from the dark pools and putting their money right back into the market as well. Woo! Man, that was some good wax, buddy.
I think you make some real valid points. I guess we'll go ahead
Yeah,
and
if I could stop coughing, they could hear them points. I'm over
right.
here dying.
But
It's all right though. But yeah, that's definitely. I agree with you. And I just think that the more we see these people investing into like these dark pools, the more money they're gonna generate off to the side to be able to put back into the market, which couldn't necessarily be a bad thing.
right. I guess we'll go ahead and we'll move into your favorite part of the stream, where we start looking at these other coins or tokens. So, do you have any off the top of your head that you're wanting to bring up tonight?
Oh yes, I do. First, let's talk about Matador token. Matador token. Woo! Matador token is rocking the charts right now. According to my trust wallet, we figured out that it necessarily was not having an issue. It's just underdog. So, Matador token though, last time I checked, they were up 77%. And sorry about this, guys. My chest is kind of messed up right now. My house is kind of dusty and other things, so got to clean a lot. Anyways, Matador token at 10:07 had a 77% spike. Don't know why, don't know where it came from, but it went up 77% at roughly about 10:07, and then kind of dropped back down a little bit. Currently sitting at about 0.25% and 0.25%. But it's a good project, solid project. Good community, lots of fun over there. Keith Ko Berry, he I seen him repping it a little bit on Twitter. Kind of why I got into it. Felt like if he's repping it, it might be a solid project. He does his his due diligence. So, um, let's see, what else we want to talk about. A lot of good Feg token. Oh yeah, Feg token. Definitely want to talk about Feg token. Uh, ever since the positive news. Sorry about the coffee, guys. Ever since the positive news of them releasing FegX version 2, they have been doing nothing but soaring up the charts. In the past one day, they're up 19.12%.
Yeah, I mean they're doing fantastic.
Phenomenal.
I mean,
Oh yeah.
they're getting tweet about nonstop. I mean they are really getting out there and getting seen. They're really starting to you know make a name for
Uh,
themselves.
here, you did hear what they had going on, correct? They were getting ready to sign a contract, and I'm not 100% sure, but I seen multiple posts about this, and I never really went and did my actual research on it, which we could do this right now. But from what I heard and seen from a couple of pretty well known Feg accounts, is that they were getting ready to sign a contract for Feg token advertising in Times Square.
Oh wow, really?
Yeah. So I was like, what in the heck is happening here? I was like, if this happens, that is huge. And ooh, yeah, so I seen a couple of it. Yeah, right here. 5 days ago from Fegman Pro says, congrats, Feg holders. The contract for the Feg ad has been signed in Times Square.
Wow, that's pretty fantastic. I mean, like I said, I think they're really trying to make a name for themselves.
Yep, Feg Chris posted it too 6 days ago. Feg is going to New York City. The contract for Feg ad in Times Square has been signed. And the dates that they will be advertised on the NASDAQ building right there, or, on the big round Jumbotron that they have on the building out there.
Mm-hmm.
They will be advertised there from July 5th to July 11th, 2021. That is huge. Don't think I've seen a cryptocurrency company do that yet.
Yeah, no, I know that plenty of people have gone out and like bought billboards and things like that for for Dogecoin and stuff like that, but I don't know about any actual token or company going out and doing that for like representation.
Oh, you ever heard of Moonshot?
Yeah, I think we talked about it in one of our streams here recently. But
Maybe. I don't know. But Moonshot was advertised in Times Square as well.
oh, was it?
Yeah, apparently. They got like a little gif of it, which is pretty sweet, man. It's cool to see that the adoption of cryptocurrency is being accepted that way, or even tokens is for that matter. You know what I'm saying?
Yeah, I mean even apparently Moonshot's up by almost 1% today.
Yeah, they're doing pretty well. So I'm pretty happy that they're doing that good. And I mean, I'm not invested, but it seems like a pretty solid project.
Yeah, I mean, I'm obviously not invested, but might be something to keep your eye on. I mean, when it comes to when it comes to these small cap projects, that's really where you end up coming in, and seeing some real changes
Well,
in your life. I mean, all it takes is, I guess, we'll take Shot for example, right? All it realistically takes is this to go, you know, to a few cents, and it could be life changing for some people. I'm not saying that it's going to happen or anything like that, or that Moonshot is even something that would be able to achieve it. All I'm saying is that when you look into investing in these small cap tokens or coins, that's where you can end up seeing some life changing wealth, and that's why looking at new projects is actually fairly important. If you're coming into projects that is massively known, then chances are you probably missed an even better opportunity to be able to get in, right? So
yeah, I mean, well, some of these options you don't even like. All right, let's take this one for example, Shiba BSC. Now the ticker on this is SHIBSC, Sheeb SC, and um, let's take this for an example. I didn't.
you're cutting out
I
real
didn't.
bad.
I didn't even. I'm sorry. I dropped my cigarette.
Yeah, they're up
I
by
did
five
not.
percent today.
Yeah, they're doing very good. All right, so I signed up for an airdrop. I didn't even spend any money on this token whatsoever. And I signed up for an airdrop about a month ago. And I was kind of just like hesitant about it because I was like, yeah, whatever, dude. I don't want none of this. I want Dogecoin. Well, I ended up signing up for it just for the heck of it, right? Then all of a sudden, one day, I'm like sitting there, and I'm like, man, I need to get some crypto in my wallet. My wallet's looking scary, and then I like closed my wallet and then opened it back up about an hour later, and the Sheeb BSC showed up. And when it dropped in my wallet, it was I think at the all-time high, maybe, um, because it was worth like $22 at the time. And I was like, holy crap, there's some money. Like, what is this? And so I started looking into it, and it's a pretty solid project. I give them props. They're doing their thing, and they've obviously went way down since when I first got my tokens, but they're doing good. They're up. They're staying steady right now. Obviously, people probably sold mass sold because they have paper hands. But I mean, in the past month, it's been on a downtrend. Obviously, like I was saying, people are selling. But other than that, it's up 5%. So they were rocking the charts for a while there.
Yeah, I mean, that's why it's really good to look into some newer projects. You got anything else for us
Yes, I do.
off the top?
I got quite a few for you off the top if you really want. Let's talk about this one. Gorilla Diamond, GDT is the ticker. This project is awesome. These guys are doing their thing. Like at first, when I first seen them come out, I was like, yeah, they might do something, right? And so I invested and I bought some of their tokens, and I was like, yeah, that it just seemed cool. Gorilla Diamond, right? And I was like, it sounds cool. I'll invest. And come to find out that these dudes are like super legit. They're for real. This project is for really real trying to do something. And they're actually doing pretty good. Right now on the 1 day chart, they're up almost 33%.
Thirty-four
So
percent from what I'm getting from Coin Market Cap right now. It says that they're up exactly 34% right now. So they're doing really good today.
yeah, they
Um,
are. I mean, with a $484,000 trading volume in the past 24 hours, they're definitely doing pretty well. I would have to say. They're just a pretty promising project, man. If anybody really wants to look into it, go check them out. They're definitely doing their thing. Definitely have a bunch of good things coming out too, from what I was seeing on their socials. So yeah,
Yeah.
this one's corrected itself to 34%. So another one off the top too. Let's look at Wall Street Games.
Well, real
Okay,
fast. Apparently, Everrise is a trending token today. Apparently, people
read
are.
my mind. The next token we were going to talk about after Wall Street Games.
Well, they.
That's funny.
We'll just switch it up a little bit then. But
Yeah, here it is. Everrise is up 15.63% on the 1-day chart. They're a really promising token. I first seen these guys right a couple weeks ago, and I was like, yeah, I don't know, because I was really sketched out about a lot of these tokens, and so I was like, you know what? Let's take a risk, because I'm a risk taker sometimes, and I was like, you know what? Screw it. Let's take a risk. So I got in about maybe like a week and a half ago. And yeah, I'm happy I got in because this is a pretty promising project. It says right here that Everrise token holders are not only rewarded through static rewards, but also through true automatic burns every trade from within the liquidity pool. 24-hour volume is 1,761,000. So these guys are rocking. Give it to them. Mad props to these guys because they're definitely doing their thing. Got a solid project, solid team, solid community. And then Wall Street Games, man. I mean, I don't know. You got something to say about them? You want to say something? Or are you invested?
in Wall Street Games.
No, into Everrise.
Oh no, unfortunately, I'm not invested in either. I just don't have the Binance to do it. Being in Texas, it's just not as easy for me to acquire Binance as everyone else.
Yep, same, man. Trust me, I heard you. I mean, not the whole acquiring Binance thing, but I don't have the Binance to invest right now, so kind of not being able to invest sucks. Especially when everything was so down the other day, and now it's so up. It just kind of sucks a little, burns a little bit. Wall Street Games, though. This token is pretty awesome. I will give it to these guys. They have something really great going on. Wall Street Games is the next generation hybrid blockchain-based online gaming platform where players battle each other in fun and addicting simple games for rewards and cryptocurrencies. Their 24-hour trading volume is 1,834K. Their market cap is, it looks like 4,277,000. So, yeah, they're definitely doing some things, man. They're up 30.77% on the 1 day.
Yeah,
These
I'm
guys
looking, and
are
they've been even they've even essentially looks like they've been climbing up since they've been climbing up all week. It looks like to me almost.
yeah, they've been definitely rocking the chart. Yeah, they went, on the 1 month they're kind of down a little bit, but if you look at that tail end right there, they're definitely coming back. It's obviously most. All right, so me and you both know this, but for the people who's watching that may not know this, cryptocurrency and tokens are two totally different things. I have a TikTok video that I posted earlier that explains this, but real fast, cryptocurrency is the native coin on the block or that operates the blockchain, and a token is a smart contract that's launched on the blockchain that is still powered by the native coin, aka the cryptocurrency. So in order to, sell or initiate transfers or anything like that of these tokens, we need Binance. And, unfortunately, we don't have it. But in the 1 week, though, Wall Street games are doing pretty good.
Realistically, I'd say they're doing fairly well overall if you consider the fact that we're on the 1 month chart, seeing that it's more than apparent that we're about to go back to the rise, that they're gonna achieve new all-time highs.
Right, no doubt. 100% agree, man. 100% agree. I think we're going to see new all-time highs all over the place. And there's a couple more, even Cluecoin's doing rather well right now. They're up 3.17%. They've moved from being worth the least in my wallet to being right in the middle. So they're climbing up. They're doing pretty good. Happy with them. They deserve it because they're doing good things out here.
For sure.
I mean, there's I got a nice chunk of tokens, and I mean, for the most part, they're doing well. And what I was trying to point at, though, with the cryptocurrency and token thing, also real fast, was that like when Binance
Oh
down,
man.
these tokens are going to go. These tokens are going to fall as well because they're still powered by Binance. So Binance can, realistically controls the price of those tokens, or even Ethereum as well. And so if Ethereum goes down, ERC20 tokens are still going to be down. Yeah, they could be up a little bit, you know what I'm saying, on the chart, but they're still essentially going to go down a little bit. So that's all I was trying to just touch on real fast. But other than that, man, Safe Moon's up 10%. Baby Doge is down 5%.
Yeah, I was actually
Burn
about to
one,
pull up Baby Doge. I thought it was something that we would check out real fast.
yeah,
Um,
it's kind of down right now, actually. Been
well,
down a little bit,
I
almost
mean,
6%. There was a mass sell last night. So,
yeah, but if you look at it from from its chart from when it began, I mean, they're actually still doing really well. It's not like they had a mass, it's not like this all-time high of theirs, came and then they crashed to to a near point down here, like how you see. They're
yeah,
maintaining, and that I think
that
that's
1 year
the
chart, they still up freaking 350%. So, yeah, I agree with you 100%. They're doing freaking well still, but yeah, they're doing rather well. On the 1 week, they're still up 70%. So yeah,
yeah. I mean,
baby.
on the over here looking out on just the 24 hours, I mean, even today's not even necessarily that bad. I mean, they're hardly, it looks like they're hardly, you know, hardly dropped down much at all. I mean, especially when you consider how much, they're still on a gain for the week, and I think that's more important than anything, is that they're still, you know, long term, they're doing, they're making good gains. You know what I mean?
Oh, absolutely, absolutely making nothing but good gains. Um, I mean, there's a couple. I have a ton more tokens in here, but they aren't tracking at the moment. So in order for me to pull those up, I'd have to like go on Foo Coins and start pulling up charts on those. But yeah, for the most part, those are pretty much the ones I'd like to highlight tonight because those ones are doing rather well. They're rocking the charts right now. Captain Token's doing well. Boob Token, Hold Token, Everrise, like Clue Coin,
Thought we'd
Earth
check out
Token.
this Richie token.
Yeah, I know. I'm really mad because I was about to buy in last Monday or the Friday before that. I just put Richie in my wallet, with the contract address,
Mm-hmm.
and was gonna buy in, and then my Binance got stolen. Obviously, we've covered that, but yeah, so my Binance got stolen, and then wasn't able to do nothing. So
Yeah, I mean, it's definitely rather unfortunate that that happened, and I definitely hope that some resolution ends up coming from that. I just thought we'd touch
Probably not,
base on
but
it. I
I'm
mean,
not worried about it.
it looks like today they're on a 15% gain, and then we go over to their 7 days, and yeah, it's not been like a steady rise, but they're still on a gain, for the past 7 days. We go out to a month, and yeah, at a month that's where you see some downwards action, but you got to remember that for the past month we've been seeing a lot of downwards action for a lot of crypto across the markets. And then this I would believe is essentially based off of the fact of when they first launched the token, and so that essentially would end up making for obvious volatility. But I would say that they're doing fairly okay. It still looks like I would consider it to be a pretty good place to get in. I mean, I don't think they can really go much lower than where they're already at right now, and so I mean, I would see it as a great opportunity to get into some of these lower cap coins or tokens.
Yeah, this is definitely. I mean, well, right now is obviously a good time if you're going to spend 20, $30 or something, right? Um, but if you only got a few dollars on your wallet, and yeah, it's obviously a good time to invest. Like, I'm not saying that it's not in these tokens. It's a definite great time to invest in some of these tokens. Make sure you do your research first, but it's definitely a great time to invest in them. But I think that if you were really going to put some money into these and try to get your the bang for your buck, you would kind of wait for a slight dip. Throw a couple dollars in now, wait for a slight dip, throw that big chunk of money in when that dip happens. And that's how I think you'll conquer the token thing. Um, and being able to, get the bigger bang for the buck. Not financial advice by any means whatsoever, just an opinion.
Yeah, we don't give financial advice here. We give opinions. If you want
Yeah,
financial
I'm not
advice, you can
licensed.
always go and hire someone who is authorized, or not necessarily authorized, but has the capability of giving you the financial advice that you need for your situation.
Right.
Other than that,
I'm not licensed to give financial advice, but I am licensed by life to give opinions.
so any other coins that you'd like to bring up before we close out the stream tonight?
Yeah, I did. I forgot to mention this one. This one is awesome. We talked about them a couple of times. I'm gonna keep talking about them because they're freaking sweet. Small supply, not very many. Blood Diamond ticker is HDLS, and these guys are actually being promoted by Bitcoin Bro right now on Twitter. So um, I was helping promote them for a little bit, and um not saying like I was paid to do anything or they hired me to do anything. I just offered to step in and help them out a little bit. Seen their Telegram didn't have a lot of members, but they like it that way, which is cool. So that's cool to them. They don't want to be listed on any super financial exchanges. um they're a pretty cool group of people, awesome people. I definitely like them. I like the devs. I like the founders, marketing team. They're all good. They're all good people, and they're really transparent. So that's really great. They but they just picked up huge sponsors all over Twitter tonight, that I've been noticing, which is awesome. So it's a big kudos to them. They're dropping this thing called HPAD. Now I think that's a swap or an exchange, one of the two, and they're listing coins on there too. So But they're also dropping their new token here in July called Hold Gold, and the ticker for that will be HDLG. If I were anybody and I had some money, I would put a couple dollars into this company just because there's only 2K of the blood diamond in circulation. And then there's only going to be like 2 million or, yeah, like 2 or 20 million of the whole gold in circulation. So it's going to be a pretty awesome project once whole gold launches and hits the market. There is actually, you know what? Let's talk about two more tokens before we close out. There's another one called Rise Above. I think we talked about them, RZA. They're about to launch here. They did their pre-sale, and I think that's still going on as we speak. I don't know if they met the full amount of RZA. And they are about to do the public sale, I think, here in the next couple of days. And
Well,
they're
I
going to be
pulled up.
listed.
I pulled up what I'm assuming is their contract, and says that they don't have any liquidity at all. Says that
That's because
the
they haven't launched yet.
so they're already listed on PooCoin, but they haven't launched yet.
Yeah, they did a pre-sale, so their contract will be listed on the PooCoin for the tracking of the pre-sale. But they're not going to have any liquidity from that until they start trading on the public market. Once they start trading on the public market, that's when all the liquidity will be entered into the coin.
Right. Okay. So what was the
You
other?
see what I'm saying?
Yeah, I understand. What was the other token you wanted to
So
talk about?
this other one, not too many people really even know about it, but the I'm friends with the guy on Twitter, okay, and he's a rapper, all right, and so he messaged me and we were talking, and so I told him that I would start sharing, his coin because it seemed like he had a pretty awesome project. It's called Little G Coin, okay, and LILG Coin. He's got an airdrop going on right now. The total supply is 7.5 million, and the idea of his project is to continue Satoshi's vision.
Well, I guess
This
we'll have to
is a pretty
keep an
good
eye on them.
project. It's an ERC20 contract, so you won't be able to find it on PooCoin. If you were to look it up on Etherscan, you would be able to pull it up.
Right.
But yeah, this is a good project. Check it out, Little G Coin on Twitter. Go give them a like and show them some love. Also, you'll find some of their links being posted on my Twitter throughout the next couple of days. And in those links, there will be the airdrop. So if you're interested in that, feel free to check it out on Revolt Tyranny on Twitter.
Not being able to.
Sure.
Yeah, I'm not able to pull them up. It would appear.
Really?
Even on Etherscan.
He didn't give me a contract address, but there's I'm pretty sure that they've already launched. So I'm pretty sure that they're trading and stuff like that. Yeah, I don't see their contract address anywhere. I mean, you might be able to find it on their website for those who are interested. I'll put the actually. How about this? How about this? If anybody in the video is interested, you can check this out right here in the comment section for Lil G coin. The other ones you can definitely most definitely track them. Maybe that's too much.
Well,
Anyways,
we'll see if we can see if we can pull it up or not.
yeah, you might be able to pull it up in Google. I haven't tried. There's the links right there in the comment section for anybody who's interested in Lil G coin.
No, I find G coin, but I can't find little
Yeah,
G coin.
you're not going to be able to find them right now. Their coin only has a couple of followers on Twitter, so that's what I'm trying to bring to their project. It's a good project. They want to link big and small businesses together within. What I'm assuming from my own perspective, not from what they're telling me, which I'm sure that if anything, we could get them on here and get them to kind of clear up some of the questions maybe in the future if people would be interested in that about what they are and what they represent. But from what I'm assuming is they want to connect small and big businesses together everywhere. But I assume that it's directly targeting the music industry as he's a rapper. So the creator of it is a rapper. So that is to me that's pretty cool. I hope to see them do some good things here in the future. They seem like they got some pretty solid things planned, so let's see what's up.
Yeah, so I think we'll close it out there. When it comes to all of these projects, everyone, make sure that you do your due diligence and keep yourself safe. Make sure that
You want
you
no
understand the
other
projects that you're investing in. Other than that, we
do
enjoyed
your
anyone who came to
research.
invest in the stream, and we enjoy seeing you around next time. Other than that,
Thank
ha-
you for tuning in.
have a great night, and Crypto Invest is out.